Good morning, ladies and gentlemen. This is the earnings roundup of the fourth quarter earnings that are coming in corporate India, and today we are joined by Mr. Venkatraman Venkateswaran. He's the Chief Financial Officer at Private Sector Federal Bank, who's here to discuss the future trajectory of earnings at this lovely private sector bank, which is trading at all-time highs after posting a record FY24 profit exceeding 3,700 crore rupees. Good morning to you, Mr. Venkatraman, and a very warm welcome on market today. We have all sorts of data on Federal Bank, which is running as part of graphics. Let's focus on gross advances for the fourth quarter, which were up 20% year on year. I believe retail was a very smart component as far as prices were concerned. Where do you think these advances are headed, and which sectors contributed the maximum?
Okay, good morning, Mr. Bhatnagar. Thank you for having me in the show. In terms of the advances growth, firstly, in terms of overall performance, like you rightly said, record profits, highest ever NII in a quarter of 2,195 crore, strong credit cost being one of the best, and asset quality continues to be pristine. So in this backdrop, in terms of your question on asset growth, we had seen a broad-based growth across both the wholesale and retail in FY24. At the same time, a conscious call was taken by the bank last year to dial up the high margin businesses. So what we had seen is a slight shift in terms of the overall business mix. Last year, FY23, the retail to wholesale mix was 54-46, whereas in FY24 end, which we recently closed, it's 56-44. So there were, within products, there are high margin products, and again, within the businesses, we made sure that the ones which contribute to the NIMs were dialed up, which helped us hold on to the NIMs as well. We in fact delivered a 2 basis point increase in NIMs in Q4. Going forward, as we see the market and the credit expansion seems intact, we are reasonably confident of guiding for similar growth numbers for FY25 as well, around 18% in terms of growth. Q1 definitely the market continues to be quite good in terms of credit opportunities, and we will continue to grow in the preferred sectors. And to your question, it will be broad-based, but within the retail and wholesale, there are products like gold, CVC, personal loans, and the relatively high margin MFI. These are the ones which will continue to grow faster than the rest of it.
Okay, Mr. Venkatraman, let's focus on the gold business since you are more focused on the south part of the country, where gold is a very important feature both in terms of investment as well as taking loans against. You have about 1,500 banking outlets. How many of them offer gold loans? What is the size of the gold loan portfolio at this point of time, and where do you see it moving in 1 year from now?
Okay. All the branches of Federal Bank offer gold loan. So the entire 1,500 branches network offers gold loan. That's one unique proposition which we have, and it's a capability which has been built over decades. Second, in terms of the overall portfolio size of gold loan, we're close to about 27,000 crore as we speak. And it is a 27% increase year on year on the gold loan portfolio. So the portfolio has grown quite handsomely over the year, and it's one business where we see good potential to grow. Despite gold prices going up, we did not increase the LTV. We had an opportunity to further increase, but knowing very well that we didn't want to be caught when prices come down suddenly, we continue to maintain our LTV is still around 71%, though the upper cap is 75%.
Fair point. So gold, of course, is within the retail loan one of the very most important trajectories that are headed higher. Mr. Venkatraman, let's focus on the core business of bank, which is lending to corporates as well as how should I say MSMEs and SMEs. We've seen this capex trajectory taking root in India, and all your larger peers have reported strong credit growth coming in from the manufacturing sector. In the advances that you have given in the fourth quarter and the full year numbers are in front of you, which are the couple of industries or sectors which are showing strong and robust credit demand amongst your customers?
Yeah, if you bifurcate, the advances of corporate amongst various sectors, if you exclude services sector, which is NBFC and others, which is just about 10-11%, the rest of it would predominantly be manufacturing, MSME, and the small businesses. Now, within that, we have seen renewables, energy, food processing, electronics. These are some of the sectors. These are the emerging growing sectors where there is a huge growth which we are seeing, and we are also one of the beneficiaries of the growth in these segments.
Fair point. Electronics is showing strong traction. Let's look at the liability side of Federal Bank's balance sheet. Mr. Venkatraman, total deposits at about 2.5 lakh crores. They are up 18% year on year and 5% Q on Q. What has been your experience for the fight for deposits that we are seeing in the borrowing landscape? I believe banks are tripping over themselves to offer higher fixed deposit rates for customers such as me. How have you fared in this part? Your CASA has declined a bit.
Yes, I think it has to be seen in the overall context of the market over the last couple of years, especially on CASA. Having said that, we have seen 18% year-on-year growth in deposits, and if you split between term deposits and CASA, and even in CASA, SA has grown quite well. It's the CA part where there is still an opportunity for us to grow, and we further split between the CASA growth in Kerala and rest of India, where we are now putting all the new branches which are being opened are in rest of India. The growth in CASA, the CASA ratio is 41% outside of Kerala and growing at 17%. So we need to be mindful of where this growth is coming from. Having said that, the base is quite large in Kerala, so even if I grow 20% outside, it may not be enough to materially shift. So we are now focusing on how do we make sure that we grow CASA in the core market as well. And term deposits, term deposits have grown handsomely. Now this is also a factor where the customer behavior has changed over the year, where traditionally people were keeping money in savings. Now there are other opportunities for them to invest or put in businesses, SIPs, insurance.
Yes.
And term deposits. The rates, obviously, in the rising rate cycle, make sense for customers to lock in at a higher rate, knowing very well that the rate cycle is likely to turn in the near future in next, say, couple of quarters. So we also got very good inflow in the term deposits. So the overall deposit story was very strong. And like you rightly said, Bhatnagar, the fight for deposits continues. It's here to stay. And at least for the next few quarters, we will see this deposit pricing continuing to be helped.
Yes, but for people like us, Mr. Venkatraman, who have been in the capital markets and the economy for the last 3 decades, we understand, this is a broader theme that's running in the mind of retail investors, that you pluck out a bit of money from time deposits and shift them into SIPs. I'm sure your bank has experienced that as well. Let's now focus on the other part of the good story that Federal Bank is telling its shareholders, is the mild decrease in gross and net non-performing assets. This, of course, is also a function of credit growth. Both of them have slid Q on Q and year on year. What is the trajectory ahead, Mr. Venkatraman, when it comes to net non-performing assets?
I think if I'm not sure which number you're saying, our GNPA ratio is the lowest in the last 35 quarters, 2.13%, and NNPA
Yes,
is 0.6%.
absolutely.
Okay, and if you look at it quarter on quarter, it's actually less. Last quarter we had a one-off in one corporate account where the GNPA was higher, but that is not obviously that was a one-off. So if you look at it from a trajectory of our asset quality continues to be pristine, amongst the best in class. Credit cost was for the quarter was next to zero. It's 0.011 bps. So obviously the credit cost continues to be kind of, as long as the asset quality is pristine, we will maintain the credit cost within a particular range. Having said that, it will normalize in FY25. We expect the credit cost to be around 30 bps in FY25. So asset quality is pretty good and strong. On the operating expenses, Bhatnagar, what you need to do is strip off that one-off cost which we had an impact in Q4 on the staff cost for wage provisioning. If you exclude that and see, again, it's a quarter of where we would have ended up with a profit of over 1,000 crore, 1,027 as against 906, which you see the reported number. So it is that one-off expense which impacted in this quarter. But for the full year, the profit has grown at 24%, net profit growth at 24%.
Right. My final question to you, Mr. Venkatraman, what is the expectation for FY25 in terms of return on assets and return on equity? Two numbers, please.
Yeah. See, return on assets over the last few years, we have been delivering on our guidance, very consistent growth over the last 3-4 years. We have been guiding for 5 to 7 bps improvement. So between last year 1.28 or 132, expect say another 5 bps improvement in FY25 on the ROA. On the ROE, 14.3, 14.4 is the current number. It should be around similar numbers next year.
Okay. Thank you, Mr. Venkateswaran, for this lovely chat, and we hope that your shareholders continue to enjoy the fabulous returns that the bank has done on its stock. Thank you so much for your time, and again, all the best for the coming quarters in this calendar year. We are living in a Goldilocks scenario as far as banking is concerned, and Federal Bank is amongst the top performers as far as the upper quartile is concerned. Thank you so much for your time once again, sir.
Thank you. Thank you for having me back.
That, ladies and gentlemen, was the top management of Federal Bank with Business Today. Do keep watching the channel for all your requirements as far as financial news are concerned. Thank you so much for your time.
The Election Commission ended days of suspense and released final turnout figures for the first and second phase of Lok Sabha elections on Tuesday. The first phase turnout has been revised up from 63.7% given on April 19